Rich Krafchick with Cobblestone Asset Management. Hope this video finds you well. Filming this video on a day where the S&P 500, the Dow, and the NASDAQ have all reached all-time highs. Something to be really excited about, right? Well, we're looking at it as an opportunity to de-risk our portfolios just a bit, and I want to spend the next couple of minutes telling you why. The Federal Reserve and their interest rate policy gets a lot of attention these days. We've been stating for several months that we expected the Fed to hold course and not cut rates. Let's do a quick recap of what we see today. So the most recent inflation number came out, and that's April of 2024, with a 3.4% increase in the CPI. Now that's versus 1 year earlier. That's still above the stated objective that the Fed is looking to achieve. Now if we go back a few years, I'll tell you it's 8% higher than April of 22. 17% higher than April of 2021, and overall the CPI has increased by 22% from April 2020, and that's through April of 2024. So the Fed has seen some progress in their fight against inflation, but they still have some work to do. Now the other side of that coin is the jobs market. The most recent unemployment number came in at 3.9%. Natural unemployment is somewhere between 4 and 6%. Because as life happens, whether it's career changes, life changes, there's going to be some natural friction there where there's unemployment. So the bottom line is we are at full employment in the economy today. We expect the Fed to look at these two variables and remain committed to fighting inflation rather than putting emphasis towards creating additional jobs. So we're not expecting the Fed to cut rates, but let's think for a moment, what does it take for that to happen? The Fed would have to see some data that justifies their need to support the economy rather than fight inflation. That would mean unemployment data would be rising, some other pressures would have to be showing, possibly some recessionary data. So sitting here at all-time highs, we think that either the market's going to have to adjust for the fact that the Fed is not going to be cutting rates in the near future, or there's going to be some surprise negative economic data ahead that does justify those cuts. Either way, the chance that we can have this soft landing that's perfectly engineered where the Fed fights inflation but doesn't cool the economy seems unlikely. We've been doing this long enough that we know if the price is right, let's exit while there's some strength. That's exactly what we've done for you.